And it's a big conversation about non-performing loans in Ghana. What is driving this 23.1% non-performing loan ratio that we are seeing? That is what we are going to discuss here on Beyond the Numbers, especially looking at how road contracts are affecting how banks are actually performing in terms of non-performing loan ratios in the country. After this short break, we will be back on the Smart Walk to give you all the figures and, most importantly, the stories behind the numbers.
Now, welcome back to the Beyond the Numbers here on the JoyNews channel. We'll bring you up-to-date analysis of critical numbers that has to do with the stress that MPLs has had on the banking sector. Now, my gentlemen here, Kofi, Caleb, and I, we're going to talk about what the Ministry of Roads and Highways has done over the years in terms of also understand the trends in MPLs on the banks over the years. One thing that is very common before we get to the numbers has to do with the Ministry of Roads and Highways. Mostly when construction is about to happen in some critical roads, you see big tractors and all the earth-moving machines coming to the area. And you who live close by feel like this is time that I'm going to experience development. But one interesting phenomenon that has been consistent over the years is that for ministry to begin the work is easy. But for them to complete it, you need spiritual and divine connection for them to finish those projects. And that has been the trend over the years. But let's get to the real issue. Roads are critical, connecting business and communities, bringing life to certain dense communities has been the real trend. Sometimes road come to a place that the value was low. Over a short period of time, land prices go high. You see more businesses booming up, and all these are connected because there is connection between transportation, easier access, and consistent development as against population increase. So this development has necessitated the need for us to consistently invest in roads. But over the years, how far have we come? Countries are far gone in terms of development, but you see one road for the last 10 years, that same road is still on government budget, still not completed, but still fund has been pushed into those projects. Why that has been the case is what we're going to assess. And Caleb is standing by on the screen. Caleb, what do you say?
Yeah, so when I talk about non-performing loans,
yes,
the road sector is very important because when you award a contract, the government doesn't pay immediately. They pay some, but then the contractors need to mobilize funds, reach a certain limit, and then present their invoices to the government. Government pays them. So usually the contractors don't have the money in their rooms. They have to go to the banks and then go and ask for loans. So if the government doesn't pay on time, it means that the contractor cannot pay back the bank. And then, we have issues with non-performing loans and all of that. But that's not the only factor. There are other factors. Also, in a particular era that we are with high interest rates, if the interest rate is high and a businessman takes a loan from a bank and he cannot pay back the loan because, slowdown economic activity, even the profits is not really matching how much he's expected to pay back, that's also going to fall under non-performing loans. So these are broadly the main two factors, the government's side of it, and then also very high interest rates. So you need to reach a certain level of revenue before you can pay back your loan and still make a profit. So that's why small businesses and all of that have been struggling these days, mainly because of the high interest rates. And if you look at the graph, and Kofi coming from there, you can see that from 2020 to 2022, for about 2 years, non-performing loans stayed between 13 and 16%.
Yeah.
So out of every loan you give out, about 13% of it, you don't get it back. So from 2020, for about 2 years, the non-performing loans rate stayed at 13 to 16%. And you can see a spike from 2023. So from 2023 up to now, it has been rising. And it has stayed elevated till then. And we are currently at 23.1%. Kofi.
Well, so it's important to talk about the stories behind these curves and the numbers that we are seeing. So one person that I've been speaking to when it comes to the non-performing loan ratio and contract is Dr. Richmond Etuahene, and very soon you see a paper from him detailing why there is that direct correlation between, unpaid contracts and non-performing loan ratio. Just like Caleb said, when somebody is awarded a contract, they definitely will go to the banks for the capital to actually do the road. And when they get the money, they pay back. But what we have seen over the years is that when you have a difficult economic environment and inflation is very high. In fact, almost all the macroeconomic indicators, especially exchange rate situation, is nothing to write home about. businesses struggle. And especially government itself will struggle because they will borrow at a higher interest rate. Its budget will increase, deficits and all of that. It becomes difficult for government to finance a deficit.
And if you're locked out of the capital markets,
that's also another angle of the story. It makes it difficult for government to actually meet its obligation in terms of the servicing. And many have said that the ideal situation is that your non-performing loan ratio should be around 10%. According to literature, it should be around 10%. But we are doing currently around 23.1%. It means that every 100 cedis that the banks lend out, they are not able to recoup about 23 cedis of it. And if you do the math and you go deep and you look at the story behind this number, what you see is that this particular high non-performing loan ratio that we are talking about isn't just coming from the private sector. It's not because banks borrow to an individual and the individual is not able to pay. But majority has come from how much government is owing the banks itself, how much contractors are owing the bank, and another big leg to the conversation is the energy sector as well. So when all of these things put together, it actually increases the non-performing loan ratio of the banks. And when they see that non-performing loan ratio is so high, banks will also find ways and means to shield themselves against the risk. So you definitely will see why currently you have this on the screen. And Caleb, you have seen it. The average lending rate versus the monetary policy rate. Still very, very high. We are still around 27% because it is still very risky to borrow either to government or to private individuals in the country simply because of the economic environment and what have you. But what we have seen so far is that the main reason why we have such a high non-performing loan ratio is simply because of our road sector, where, cocoa roads alone, you have a debt of almost 30 billion Ghana cedis. You ask yourself, Cocoa Board is supposed to be buying cocoa. Why are they into roads? People go for this contract, they go for loans with the expectation that after they are done executing the contract, government will pay them for them to go and pay back the government. And so the more government delays in paying this road contract, the more the banking sector also suffers, Winston.
Let's go back to the first slide. It's interesting to note that we've seen the consistent fall, especially if you look at from 2022, since the domestic debt exchange program began. The banking sector has experienced stress. The banks are unable to lend to the SMEs, the private sector, and we've seen how much of debt has bedeviled the country, and that cumulatively tells you of the stress in the banking sector, where we've seen the non-performing loan increasing consistently. Most businesses during those periods, government consistently has obligations, most of them being serviced by statutory obligations that they have to serve. Most of the monies going into debt restructuring, meeting certain obligations that you say are not directly linked to the development of the nation. So the contractors are being owed. The need for construction, you see during the election, promises came by. We'll give you 10,000 roads, operation this, operation that. They'll give the slogan of the year of roads. All of them comes to light. But one key conversation that we always want to speak about is where the money day. But that question, shifting that post, constantly put us at the point where we see contract being given without corresponding obligations. The banks are at the place where they have to find money because they always find security in long-term investment and long-term securities. However, we've seen this unsustainable nature of financial management or risk assessment leading to us to where we are. Right now, who is benefiting the hit, who is getting the hit, is the individual SMEs who are supposed to champion the economy like what is done in Singapore. They ensure that low rate for SMEs, the economy is basically being helped by businesses, unlike us where since how much we've been spending all this while, nothing can be told about investment. We've seen a lot of government slogan, previous, past, all of them leading to we making money, pushing money to that does not lead to corresponding economic development. We just read recent assessment by World Bank saying that all this growth is not championing or bringing about jobs. So we have unemployment increasing astronomically, but the stress still lies to the ripple effect of what has not been done in terms of risk assessment in LPLs.
Road contracts very important because you showed me this figure and I was surprised. Looking at the commitment alone, close to about 104 billion Ghana cedis in road commitments in a certain year. Did we actually ask ourselves how we're going to get this money to fund it?
I think even before this, let's go to the previous slide.
Yeah.
So before this, we have the arrears by the Ministry of Roads and Highways. So these arrears are made up of the IPCs. So if a contractor does some work out to a point and it's certified, they take it to the ministry takes it to finance, and then they pay the contractor. So this, as well as other invoices in the road project, amount to 15.4 billion. So this is for work that has been done.
Yeah.
So roads have been contracted, infrastructure projects and all of that has been done by the contractors, and it needs to be paid. And this is a total, 15.4 billion, according to the Finance Ministry, as at the end of 2024. So this is on the books. This has been owed. But then the current administration said they are vetting this before they make any payments. Now, the commitments. So if we move to the next slide, you see the commitments, 103 billion. So this is not for work that has been done yet, but work that's supposed to be done. So the ministry has signed contracts and all of that saying that construct these roads, build these bridges, and we'll pay you this money. So this has not been done yet. So, but we've committed to it, so we have to find money for this. But then the 15.4 billion is what we need to pay. So this is the money that contractors need to have, banks need to have, and that's what's causing the non-performing loans to go up.
Well, I mean, you'll be shocked that the roads minister says we can pay about 4 billion now, right? I mean, because the entire arrears clearance for this year is around 13 billion Ghana cedis, right? And the roads minister said we've been able to find 4 billion for the road contractors. We've all seen what is going on the Pokwase in Sawam Road, a road that costs around more than $300 million. The expectation was that by 2024 we should be done with that road, but simply because of we don't have the capital.
Paid payments.
Exactly. And then also you ask yourself, what has been done so far? How did the contractor get the money? They got the money from the banks. Not just the road, construction side, but if you look at the energy sector.
Yes.
I have always said that Ghana's energy sector has become the biggest problem we have. It has become also a debt-making machine.
A sinking hole.
Exactly. If you look at IPPs, for instance, their commitment to banks also keep rising. Why? Because IPPs, or independent power producers who produce power on behalf of the state, and the last time we checked the numbers, they produce about 70% of the power we consume currently. How do they produce? They rely on capital. How do they get the capital? Most of them get it from the banks. So they produce with the aim that government will pay them later. And another cash waterfall mechanism system, which we've always analyzed, we all know how payments have delayed. It's just recently that things have begun to...
Very stable now.
Stable also because the city is doing well. When the city begins to misbehave, cash waterfall mechanism will also misbehave. The banks will struggle. And so, if you look at the whole thing, you will see that the non-performing loan ratio that we are seeing currently isn't really from the private sector or from individuals who are, of course, there are individuals who are borrowing because of the constraint, they are not able to pay. But the biggest component is coming from government's commitment. And somebody asked, if you want to keep non-performing or bring non-performing loan ratio to 10%, then tell government to pay it there, Winston.
If government also decides to do that, most of the contractors are also looking at the city value of their debt owed them. They perceive that if the economy is doing too well, it will bring down their value that they're supposed to collect. For instance, there are contractors who are being owed for more than 5 years now.
Yeah.
If you go there, some of them day by day, they are standing at the ministry, knocking at the doors, trying as much as possible to find easy ways. That is where it fuels corruption, when there's no transparency in payment and release of funds. And that comes by when most of the road contracts are politicized. And that is a key hurdle for us as a country, where most of the road contracts are just from the central government, not necessarily decentralized to the municipal district assemblies, where we can say that specific rules and specific funds are allocated per year or per season, that we could see that individuals or there's accountability to how much has been spent. One thing about the banking sector, which Kofi really hits on, which is very important, is how they've been able to assess loan. They are into sales of loans. That is one of their products. And so if you are going to sell the same product to a different market, you must understand the market.
But no commercial bank has money on its own. They depend on money from, people who come and deposit.
Definitely.
Right?
And by that, they have to understand that the same loan you give to the SME, the risk assessment is different from the same loan being given to a mining firm. However, the key fundamentals, interest rate, policy rate, all of them remain the same, but you must also revalue your risks to understand how long you can hold on to a certain risk. For instance, if you're a bank within a financial period, you have plans. Every year they have plans or target for the year, and you know that the amount of money you are giving to a certain sector in long-term basis, it will affect your financials. Your adequacy ratio will be affected.
Solvency issue and all of that.
Exactly. All these are assessments that they need to make. Unlike giving it to an individual who is about to go and remove goods from the port because he knows that once the goods are cleared, within the 3 months, he can pay back. So there's the need for us to have a terrain where there is demarcation, there's regulation of how banks were supposed to release loans. Although we've recently had the central bank giving some measures, which we'll come back to shortly.
But speaking on the private side too, once non-performing loans go up, banks are scared to give out loans.
Yes.
Banks now move to government treasuries. They go to the government bonds. So now the government treasury bills.
We also saw how capital flow to the private sector was sinking during the debt restructuring period because around that time, government still needed money, so they needed to keep the treasury bill rates very high, so it was very attractive. It was attracting the capital from the banks. Banks didn't want to lend to individuals because already they are dealing with $1 to 16 cedis and all of that. That was not a good environment. But Winston spoke about the target of the Bank of Ghana. This is the target of the Bank of Ghana, and you have been looking at it. But my big question is, how do you drive down non-performing loan ratio to 10% when government itself, in terms of those who are really owing the bank, government is number one? The banks have already...
Government is the main killing. In this instance, government is the main killing. That narrative basically is government.
The banks have already struggled. They've already gone through the ordeal of debt restructuring. Some of them have had some haircuts, elongated principal maturity and all of that. But this is the target of the Bank of Ghana. I want you to walk us through it and tell me if you think that this will be realistic. If government decide not to pay, it's part of the bargain.
But then, also speaking with government, government always pays. But the only problem is that because of the shifts in administration, there are some technicalities.
Yeah, government always pays, but the timing and how regular the payment is very, very important.
So in the short term, you are starving banks of excess funds that could go into the private sector. And now even though interest rates are coming down, they are still elevated. So private sector players are also suffering. So if majority of the funds are going to government treasuries, part of it are not being paid back by the government, the little left, they are charging very high interest rates. The private sector will suffer. And private sector is the one going to drive up growth.
Exactly.
But then the Bank of Ghana has some few measures now. They say that they should maintain robust credit management framework. So every bank needs to have a board, a credit management board, that looks at their non-performing loans and then reports to the Bank of Ghana regularly. Also, they have to keep their NPL ratio at 10% of total loans. And once it crosses that 10% mark, they have to notify the Bank of Ghana. And then the Bank of Ghana will step in and see what they can do. Also, they have to write off some loans that they see that they're not getting them back. So this might also come in with the contractors because we had the government raise an alarm that some contractors were awarded without proper documentation. And the finance minister said, if you don't have the documents, you don't pay.
You don't pay.
So if you're a contractor without the right documents, you can't pay the bank back. So the bank will have to write off that loan. And this is also part of the guideline that the BOG is bringing on board. And then the BOG is also saying that go after collaterals early. So once you notify that the defaulter or the loan taker cannot pay back, immediately go after the person's assets, the collateral used. Because before you can take a loan, you have to put out collateral. So go after the collateral early and then sell it off, liquidate it, and add it to your books. Because as you can see, the NPLs hit the bank heavily.
Yeah.
Because once you're not paying back, the bank cannot issue new credit again.
Exactly.
Because that's how banks run. Banks, they take your money, go and invest it in loans or give it to someone else, a private equity manager to manage, but mainly from loans, because loans attract interest. The interest is what comes back to the bank, and that's how the bank continues operations. So if the loan process or NPLs keep rising, banks will be handicapped, and then a situation might arise where the banks would suffer to pay back, to pay depositors and all of that. But so that's the situation that the Bank of Ghana does not want to reach. So it's trying to put its heavy hand in there before it gets out of hand. Because as you can see from the graph earlier, it's going up. It's about 23% now, but it's coming down a bit. So it came down from April last year to the end of last year, but it's still going up again. So the Bank of Ghana needs to put that in check.
Well, Caleb made an important point, Winston, and that point is that once government refuses or delay in the payment of the contractors, what happens is that non-performing loan will go up. Banks will be scared to lend to the private sector. The private guy will be starved. They cannot drive growth. But I also understand that the 24-hour economy policy is expected to be private sector led. So if we are having such a high non-performing loan ratio, how do we expect the private sector to lead when they don't have capital? And even where they expect the capital, that person is the one owing more in terms of the non-performing loan ratio.
Interest rates are high.
Exactly. Still around 27%, although we're all celebrating that 300 basis point cut in policy rate. But the question is that how does private sector even drive that 24-hour economy project or program when they are being starved capital or access to funds because banks are being cautious because of the high non-performing loan ratio?
Before Winston gets it, last year the BOG added some caveats to the to banks that if you don't give out a certain amount of loans, you have to keep more reserves. So the more loans you give out, the less reserves you can keep, and then the profitability of a bank comes down.
Wow,
so
that's a big compulsion.
So the bank has been trying to encourage the bank to keep giving out loans. So even though the non-performing loan is an issue, it wants the banks to be giving out loans because that's what drives.
This will be an issue for banks who don't have mother companies backing them. So just the banks who are...
Especially the local banks, right?
Exactly. They are going to feel the stress more, basically, because they can't basically go around their books, but they have to be transparent and fulfill their mandates. Else, BOG, they'll crack their rack anytime soon. But just as Kofi was mentioning, it's important that every project of this nature needs a flow, which is the liquidity, sustainable financing. One thing that Ethiopia did between 2000 and 2020 was to construct about 120,000 kilometer road. And that particular project was targeted at ensuring about 85% of the market or villages are connected to the market. And when I talk about villages, that is key places where there's harvest of products. For instance, most of their staple foods from the villages, the roads that leads to the key market communities, those are the plans they did, because they understand that when the economy is reviving, there's the need for flow, easy access and all that. And that will, in a way, bring money into the system. The banks will have where the market will every day be sending money to the banks.
The multiplier effect.
Exactly, the multiplier effect is wide. But one thing that this government has done, which we are yet to see the ripple effect, is the commitment of the oil revenue to the big push. And with that, it gives some form of security to the project that they've promised in the next 4 years. But we want to see how much of the oil revenue will be accumulated, considering global shocks that may come as an effect of how much we can expect. Already we've seen over the years how the oil revenue was managed. We understood that some of it was used to finance the free senior high school, and these are some of the ripple effect we've seen of the benefits of high specialization in terms of human resource. But now we need capital resource to ensure that these roads are really financed and complete on time, because the uncompleted projects in the country are everywhere.
Most of them are roads.
Exactly. And the road is a key aspect of this project, because how can you go to a project site far in the bush when the roads leading there and sending the materials there are not good? That is why we have a lot of factories that have died off over the years, because the roads to supply even raw materials are a key challenge. So I think sustainable financing is a key.
Even in the heart of the urban areas, a road like the beach road along Nungwa, Teshi, and Labadi, That road was in a very good condition until government decided to do expansion. No big fuss about that. That's a very good initiative. But we all know that because of lack of funds, that road has been left there. And you look at a luxurious hotel, 5-star hotel like Labadi Beach Hotel, and the road that passes in front of that hotel, the bridge even along the Kofi
has been there for decades.
That bridge is actually corroding off. And government is looking at that. And the question is, how do they even find money to go and,
let me also chip in. The
Pukwasa-Masama
Road, it's now like a swimming pool. If your car cannot be a submarine, don't try that road.
But it's a major stretch from Accra to Kumasi. Exactly. That's where most of the tracks pass. So economic activity will be dampened if the road is not.
Well, we all know that there's opportunity cost to everything. But the big question is, if you really want non-performing loan ratio to be at 10%, then government must do its part of the bargain by paying contractors. And in fact, corruption is almost everywhere, so contract needs to be assessed. There's some form of auditing needs to go on before government goes ahead with the payment. But the big takeaway is that majority of the non-performing loans we are seeing, a significant component comes from government. And if you are looking for 10%, government needs to pay its part of the bargain. This has been Beyond the Numbers with me, Isaac, Kofi, Agyei, and
Winston, Tackie. Ziblim.
Oh, of course, we'll be here on Friday, 5:30 p.m. You can join us. This is JoyNews, independent, fearless, and credible.